Dalal Street extends morning gains. Nifty ends about 23,700. HDFC Bank, L&T, Reliance back for the bulls. Broader markets rise in line with blue chips.
Bajaj Auto's December sales miss expectations. M&M numbers in line. Tractors see good growth at the cost of escorts, which see a volume dip.
CNBC TV18's big market poll of over 60 fund managers reveals that the expectation of equity returns are modest, with most eyeing under 11% returns in 2025. Those polled mostly prefer large caps, believe earnings will be a key stock driver, and RBI will cut rates early in 2025, and the rupee will weaken further. Hello, welcome to a fresh new edition of Markets Forward on CNBC TV18, your go-to show where we aim to get you all the key data points to gear up for the next trading day. Rima, hi, and an interesting day in terms of the market because we did see that recovery coming in.
Indeed, and it's a positive close on day one, so it's a great way to start the new year. Benchmark indices ending with a gain of about 0.4%. The Nifty closer to 23,740, up nearly 100 points. The Sensex surging 370 points. It started off very flat, absolutely flat and unchanged, but things picked up as the day progressed. A better performance for the broader markets, particularly the small cap index, which ended with a gain of nearly 1%, and the advanced decline ratio was positive at 3:1. That said, it was still a low volume, languid session, and the Indian markets were trading in isolation because all the global markets were shut on account of New Year's. Sectorally, I think it's only autos which deserves mention. That's the sectoral winner for the day, because largely the December sales, whether it's passenger vehicles, etc., has been pretty good. So autos stood out with names like M&M, Maruti, even Tata Motors, Eicher Motors rallied in trade. Banks moved in line with the benchmark indices with a gain of about 0.4%, but ICICI Bank, IndusInd Bank, HDFC Bank came in for buying. And on the way down, I think it's only the real estate index, which was down over 1%. But other than that, there wasn't too much by way of a sectoral performance.
Absolutely not much there. Real estate as well as Nifty, metal, that's the only one with a slight bit of a decline.
Nifty metal was down like 0.1%, so really is the only one which deserves a mention.
Yeah. Right? So yes, that's what it was like. But on that note, we will tell you the lineup that is in store for you today. We will start with the top movers and shakers for the day with Hormas, then move on, and auto stocks took the spotlight on the back of December sales data. While other stocks on the radar is Karur Vysya Bank, IREDA, as it surged in trade over its Q3 business update. So stay tuned in as we get you more on that front. But last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. But starting up with the segment with Hormas, and Hormas, across to you for the top movers and shakers on the big one.
It was a day that was dominated mostly by auto sales and, of course, the broader market names. There was plenty of stock-specific activity that was seen there. But the larger players, be it the likes of M&M and Maruti, they were the ones that led the show today after the auto sales numbers. Then Escorts and Bajaj Auto, after they reported their numbers, recovered slightly from the lows of the day, because at one point both these names were down up to 3% each. There were a lot of companies that won orders in today's session. Power Mech won another order from Adani Power. Rights won an order from Guyana. The stock was up almost in double digits yesterday, and it's seen another move in today's session as well. Indotech also won an order. Kalpataru Projects also, and along with NCC, both of them ending with gains after an order win. Fertilizer stocks were in focus after the announcements made by the cabinet, and most of these names, be it Coromandel, RCF and the likes, ending with gains of anywhere between 1.5% to as high as 4%. There are plenty of other movers in trade today, most of them that saw stocks moving to a 52-week high, the likes of Blue Star, Lemon Tree, Muthoot Finance, Jubilant Foods, and all of these names ended at the highest point of the day, barring Blue Star, and even that stock at one point of time was up almost 6 to 7%, ending at a record high. And lastly, some of the movers in December that were witnessing some profit booking in today's session. Paytm ended lower after a 40% move in the last 1 month. Piramal Pharma ended at the lowest point of the day. Campus Activewear saw a brief spike towards the close of the trading session, and that saw a recovery from the lows of the day, while the others like Prestige Estates and Godfrey Phillips too ended near the day's low. Back to you guys.
Thank you. Let's invite our guest, Mayuresh Joshi, Head of Equity Research at William O'Neill, and Jay Thakkar of ICICI Securities on the show. Gentlemen, thank you. Jay, let me start with you. What have you made of the price action today? Is this a rebound? Because markets had sold off quite a bit in the run-up to today's trading session, and volumes were on the lower side. So would you give any weightage or credence to the kind of up move that we've seen today?
Hi, good afternoon to you, Rima. Today's up move is more or less coming from a bounce back, I would say, rather, Rima, from quite an oversold territory. Yes, markets are very oversold. If you look at the couple of data points, the most importantly, the FI net long position is, almost to 13 to 14%. So, they are short by 86 to 87%, which is, nearly to oversold, region. Second point is that, majority of these sectors, which are high beta names, Rima, are quite oversold. I would say we have seen huge short positions in all of them, may it be Nifty Auto, Nifty Oil and Gas, Nifty Realty, Nifty Metal. All of this had underperformed Nifty quite a lot in November and December months. And out there, we have seen highest OI that's getting built up in the last couple of months. So, there is a short covering expected out there. Apart from that, the strength is witnessed clearly in defensives, maybe, Nifty Pharma or maybe, Nifty FMCG. So now FMCG is turning back, showing signs of, short covering. So is Nifty Auto. I just hope that if Nifty Oil and Gas also shows that signals or indicates short covering going forward, then after Nifty will be able to move beyond 24,000. So the real strength, Rima, I would say on Nifty will be confirmed about 24,000 levels. If it manages to surpass those levels maybe tomorrow or day after, because tomorrow being a weekly expiry, the first weekly expiry of 2025. So if it manages to surpass those levels, then yes, it can reach to 24,800. Else it might just trade in that range of 23,300 to 24,000 levels.
Okay, right. Mayuresh, good afternoon, and thank you so much for joining in with us. What I also want to know is in terms of Pharma, Nifty Pharma, how are we looking at Nifty Pharma now? Given that we have seen a run-up coming in today, yes, obviously it's been a bit subdued, just a 0.2% gain that we're seeing there for the Pharma index. But overall, anything interesting that you're looking at in the Nifty Pharma front?
Good morning, and a very happy New Year to you as well. So I think the pharma sector probably has outperformed to a large extent over the past few quarters, and a few stocks have done exceptionally well, case in point being Lupin. The other stocks like Dr. Reddy's, with a very strong specialty portfolio, is something that can be looked at as well, merely because of the point of biosimilars that they're probably going through at this juncture, and the kind of pipeline that they've probably created. The monetization and the approval of this pipeline, as it happens over the next few quarters, obviously becomes an offset effect for a lot of companies as far as Revlimid is concerned, which will probably go off balance sheets as far as 26 is concerned. So I think Dr. Reddy's is one stock that we're keeping on our radar. The other stock is Sun Pharma. I think very similar to Dr. Reddy's. They've got a huge and a very extensive specialty pipeline created. A few of their drugs are also going through phase 3 trials. And these are very, very niche applications that we're probably looking at. So as these approvals come through and as that core monetization phase starts coming in respect of revenue exclusivity with better margins, I think these companies are poised in a better fashion to probably have a better earnings growth compared to the rest of the pack. So yeah, I think one of the larger names, Dr. Reddy's, Sun Pharma, is something that we're keeping on the list.
Let's talk about autos because that dominated the headline, the auto sales numbers, starting with Maruti Suzuki. This was a standout performer, and here total sales have gone up by nearly 30% on a year-on-year basis. And the growth or the surprise was led by the recovery in the compact or mini car segment, the small car segment. That saw a growth of 29% on a low base. However, for the full year, that's from April to December, small car sales are still down 10%. So it's still weak, but in December, we've seen a recovery and SUV growth has been strong. Bajaj Auto was, I think, the sole, even Escorts. Bajaj and Escorts were the two disappointing numbers. For Bajaj, total sales were down 1.1%, so there's no recovery in domestic two-wheelers, but exports are doing very well for the company. Export sales went up by nearly 70% and is now 50% of the overall portfolio. And even the electric two-wheelers, according to the Vahan market, Vahan data, the electric two-wheeler market share of Bajaj Auto is at 25%. It's the market leader right now. For M&M, and that's the other standout performer along with Maruti, because the company's passenger vehicle sales does well with a growth of about 18%. So SUVs are doing well for M&M again. And even the tractor performance has been robust at 20%. For M&M, the tractor performance particularly stands out because Escorts reported a 10% decline in the tractor sales in the month of December, while Hyundai was a sort of a flattish, subdued month. Total sales were down 2.4%, but again, domestic fared a little bit better. Mayuresh, in the auto pack, which one would you bet with? Would you be concerned about the continued weakness that we're seeing in Bajaj Auto's domestic sale? And would you read anything into the recovery in Maruti's small car segment?
Just to answer your question, Rima, I think Bajaj might go through a soft patch. So to that extent, I think really to be seen in terms of both their hybrid vehicle that they've probably launched and expectations in terms of their export sales, how they are shaping up, both two-wheelers as well as three-wheelers. So I think Q3 numbers will put some interesting perspective to that. So I think we'll wait and watch on that one. As far as Maruti is concerned, I think, yes, it was indeed a surprise. But whether this holds on is something to be seen. I think the initial data points that were coming through were cars in excess of 15 lakhs were not seeing any demand pressure. Cars in less of 15 lakhs in terms of a price tag were seeing some sort of a pressure, but it doesn't seem from Maruti's numbers, at least at this juncture. But let's wait and watch. Obviously, this stock remains on our watch list. But as I discussed in the previous show as well, I think M&M, with a very strong performance expected in terms of their SUV sales, expectations in terms of more launches expected to come over the next few quarters. And though pricing and though competition might probably remain as headwinds for the sector as a whole, I think it should be a steady state performance from M&M as far as the SUVs are concerned on the PV side, the tractor side expected to hold up as well. And the other parts of their businesses, including their financial subsidiaries, the overall asset to P value should probably see some element of increase as we head into FY25 as well. So I think M&M stands out. The Maruti stands on the watch list. Within two-wheelers, TVS Motors probably stands out.
Okay. Keeping an eye on the stocks there. Now, on the first day of New Year, Jefferies and Kotak Institutional Equities have announced model portfolio changes. Nimesh is joining with us to give us those details. Nimesh?
Well, 24 was a good year for a lot of the investors, but now going into 25, some influential, strategists have made some changes to the model portfolio. I'll start with Chris Wood first. He wrote a couple of days back in the Asia ex-Japan long-only portfolio. He's reintroduced HDFC Bank after a long time with a 4% weight, and he's done that by reducing the weight in four other companies, which is Macrotech Developers, L&T, ICICI Bank, and Axis Bank by 1% each. So that's a big first change that is made to the Asia ex-Japan portfolio. The other important change that is made is adding Siemens India to the Asia ex-Japan with a 4% weight there as well. So that's a change in the Asia Japan. In the India long-only portfolio as well, he has added Siemens India with a 4% weight, and he's cut the weight on AU Small Finance Bank, and he's also introduced HDFC Bank with 1% weight in India long-only portfolio by reducing the stake or by cutting the weight in Axis Bank. So that's the large changes which has been done by Chris Wood of Jefferies. Sanjeev Prasad of Kotak has written a note for next year, and he's also made some important changes to the model portfolio. He's reduced ICICI Bank by almost 90 basis points and allocated the same to IndusInd Bank. So given the fact that IndusInd Bank has underperformed so much, there is a bit of change within the financial in that particular name. In the consumer names, he's removed Britannia from that list, and also reduced the weight on United Spirits, and that's been added to the likes of Dabur and GCPL. Both these stocks were big underperformers of 24. Within the insurance names, he's removed SBI Life, which has been the best performing insurance name there, and he's allocated that same weight to the likes of HDFC Life and ICICI Pru Life. And finally, he's also increased the weight on Adani Ports. Remember, the stock is sharply corrected in the last few months, and he's added 50 basis points to Cipla as well. So these are the few changes that Sanjeev Prasad has made in his model portfolio. The big takeaway is a lot of the strategists are now adding the underperformers of last year could be as a potential winners for this year, and hence adding to their model portfolios.
Thank you very much for that. Talking about Karur Vysya Bank, that surged after coming out with their business update. IREDA also gained. Abhishek is here with a wrap. Abhishek.
Well, to begin with, IREDA has given strong business momentum this time around. The disbursements are up more than 67% quarter-on-quarter. That helped the loan growth. The loan growth came in at 36.4% YOY and close to 7% sequentially. If you take a look at the disbursements and AUM growth number, it looks like the tenure of the book might have increased. So, disbursements to AUM ratio that I calculate is at 60.5% versus 29% in the previous quarter, suggesting an increase in the tenure of the book. Karur Vysya Bank, they have gained market share, especially the deposit growth is pretty strong over there. Deposit growth is at 15.75% on a year-on-year basis and about 3.5% on a sequential basis. The CASA has been declining for the entire sector. Their CASA absolute growth is about 4.3% YOY and a decline of about 0.2% sequentially. So they have seen their CASA ratio decline both YOY and quarter-on-quarter. Advances growth is healthy at 14% YOY and about 3.2% quarter-on-quarter. Calculation shows that their credit deposit ratio has declined both YOY and quarter-on-quarter. So in terms of the net interest margin, that could come under pressure in this quarter versus the previous quarter. Back to you.
Okay. Net interest margins maybe could come under pressure this quarter versus last quarter. Thanks so much for that, Abhishek, keeping an eye out on Karur Vysya Bank over there. But Mayuresh, what's your view coming in for Karur Vysya Bank? Looking at the Q3 numbers, anything that you would be looking at here? Is it attractive right now?
So, Vinny, I think we continue liking that. We remain optimistic on this bank. This is one of our picks within the mid-cap private space. Obviously, in addition to what Abhishek just mentioned, the provisioning coverage is at 96%. There might be some compression on NIMs that might come through, but in my opinion, very, very marginal. It should not be a significant decline. And therefore, I think the business mix that they've got, retail business around 25%, a large part of their business stems from commercial and corporate banking, where the credit underwriting has been very, very superior over the past few quarters. And I'm pretty sure they'll continue doing that. And as far as the overall restructured book is concerned, so if you look at the overall restructured book, including net NPAs, which are one of the lowest in the industry at 0.25, along with the SMA1, SMA2 book, which lies at around 0.5, 0.6. My own sense is that the overall ratios are expected to come down even further, along with cost-to-income ratios coming down and a decent capital adequacy, giving it support for superior ROAs of 1.7 and ROEs of 17%. That it boasts about. So yeah, I think we remain very, very optimistic about Karur.
Let's get to some more stock-specific action. Shares of power generation company SJVN gained 6% after it signed an MOU with Bihar government for multiple pumped storage projects. Vivek is here with the details.
Well, that's right. So SJVN remained in focus and was the top gainer throughout the trading session, given the fact that this hydropower company actually yesterday announced to the exchanges that they had signed multiple MOUs. These are for pumped storage projects in the state of Bihar. The company, in fact, has committed to investments of close to 10,000 crore rupees in Bihar itself. Now, along with that, the company also gave details of one particular project where they had gone ahead and done the feasibility study. And this particular project is the Hatida Durgavati PSP, which amounts to close to 1,000 megawatt, where the company has 4 units of 250 megawatt each. What is the cost of the project? Close to 5,663 crore. The company anticipates a daily peak energy of close to 6.325 million units, which works out to an annual peak energy of close to 2,308 million units. The levelized tariff appears to be quite high at 9.39 rupees per kilowatt hour. This is something that the company anticipates based on February 2024 levels. Now, remember, SJVN operational renewable power generation capacity of close to 2.5 gigawatt, total capacity of 17 gigawatt, taking into account both under construction as well as proposed construction projects that the company has announced.
Thank you very much for that, Jay. Any thoughts on SJVN? Because today you had a big move on large volumes.
Absolutely. In fact, today, yes, Rima, as you rightly said, the volumes were quite high, and the stock technically, I would say, has reversed from quite an important level of 105. Rima. There's not much to read into futures data, as it was just recently introduced in December series. However, looking at the options data, it indicates that the levels of 110 to 115 has good amount of call base. So if those levels are taken off, the stock is likely to inch towards 130 as well in this series. 105 is a very crucial critical support, and on the weekly charts, it's quite oversold. So there is a good chance of a bounce back. because on the daily charts, we have already seen the positive divergence coming in the momentum. So 105 on the lower side, it's trading at 111. If there is a chance to go until 130, so I think it's a good risk reward on the long side.
Okay, good risk reward on the long side. That's the word coming in on SJVN. But okay, thank you so much, Mayuresh, as well as Jay, actually, for joining in with us on the show and giving us your views on the markets as well as individual stocks. On that note, we're going to slip into a very short break, but after the break, we'll get you top corporate voices along with the key market events to watch out for on the other side. Welcome back to Markets Forward on CNBC TV18. Now let's take a quick look at the key corporate voices we had over the course of the day. First up is SBI. The lender doesn't expect any significant cost escalations on deposits as it renews its focus on deposit mobilization. The management said that post-COVID, it witnessed a significant rise in credit growth, and further, the management expects stabilization in NIMs on regulatory clampdowns on mis-selling of insurance products. Now, the SBI management says that the regulator is likely to take a look at suggestions submitted by the banking industry as well.
Next up is Mazgaon Dock Shipbuilders. The management guides for a 10 to 12% growth in FY25 and FY26. They say the company has seen a certain uptick in their margins while maintaining the 12 to 15% level. Further, they've delivered 5 Scorpion-class submarines. The 6th is yet to be delivered. It is expecting a contract for 3 more such submarines.
Moving on from shipbuilders to healthcare providers, KIMS Hospital expects its revenue to double in the next 2 to 3 years. The hospital chain is looking at adding 2,000 beds in 2025, and it expects growth to improve and revenue to pick up pace due to its recent expansion. The management believes margin will see a decline in the short term, but it expects margins to be at 27% range in the long term.
And before we wrap, we'll bring you some of the key market events to watch out for tomorrow. Upasana is standing by.
Well, it looks like quite an eventful day tomorrow. First up, let me start with the global economic cues. US will be reporting its initial jobless claims, manufacturing PMI data, and crude oil inventory data. Europe will be also reporting its manufacturing PMI data for the month of December, and back home, India will also report the S&P Global Manufacturing PMI data. Now, let us look at the key stocks that we'll be closely watching out for on the back of corporate action. Companies like Camlin Fine Sciences, Dollar Industries, and Balkrishna Paper Mills, all these 3 companies, board meeting is scheduled for tomorrow for their fundraising plans. And lastly, on the IPO front, Pharma Equipment IPO closes for subscription on 2nd of Jan. So these are all the list of key events that we'll be closely watching out for tomorrow.
Thank you. And that brings us to a wrap in this edition of Markets Forward. We thank you for watching. Hope you enjoyed the show. We'll be back with more news and updates on the other side.